Hello, guys. I am back. So let's welcome you guys to Investment in Stock 101. So we saw income statement, income, expenses, net income last time for a company called Best Inc. It's a Chinese company. Today we're gonna look at their balance sheet. Okay, balance sheet. What we want to look at is three things as well. What are the asset? What are the liabilities? What is the equity? So let's go and look at that. So here's the balance sheet for Best Inc. Okay, so it gives you 3 years again. This is more than that. That's like 3 years in the first quarter of 2021. So you can see total asset. They have one 18 million worth of asset. Okay, 2018, 2019 they have 20 million, and in 2020 they have 20.2 million. So the assets increase, that's good. In the first quarter of 2021 they have about 19 million, so which is really good. So let's look at the liabilities. Total liability was total asset, total liability. So in 2008 they have 10 million, and they have 10 million in 2019. 2020 they have 12 million, and they still have 12.5 million in 2021. So this is current liability. Let's look at total liability. 15 million, 16 million, 17 million, and 18 million. So let's look at total equity. Equity is total asset minus total liability to see how they work the asset. Okay, you can see they are positive in asset, right? 3 million, 3 million, 2 million, and 1.7 million. So this company, if we look at it, that's Best Inc., right? It's a Chinese company. It might be a new company. Let's go and look at the Robinhood, and so we can see what information we can find out. So this company is not too new because it was founded in 2007, and it did have 6,900 employee. It's a good size. It's a small company, but it's got a good size. But the stock keeps going up because they're not making money. They have some asset, right? They are positive asset, but they keep losing money every year. We saw in the income statement that the income is not growing. That's a problem. You want to see growth. For 2020, we can understand because we have an epidemic. For 2018, 2019, it should be better. And you can see that if we go to 5 years, they 2017, that's when they go public, right? And then they keep going down from here because the income is not good. They've been losing money for the past 3 years. If we go back 5 years, we probably saw that the income was going down from the time they declare they were public. Now you understand the public company. Now it's in the Chinese stock exchange, but it also listed in the U.S. stock exchange as well. That's why we can buy Chinese company in the U.S. stock exchange because they are probably doing some business here in the U.S. So it's you can see they become earning per share has been negative for a couple of quarters now, and yeah, so it's not good. So I did buy it in April 22nd at $1.47. And then I look at it, I was like, wait a minute now, and I sell it, right? I sell all my shares because I was not making any good money here. So I spend 3100. I sell it for 32, about $100, but it's not doing well. Okay, so that's what we are looking for. We have to look at this information, and then when we look at the chart, we'll be able to see that this company balance sheet is telling us the balance sheet is not too bad. They have a good amount of asset, but the problem is they've been losing money. So are they using the asset to pay for the money they are losing every quarter, every year? So that's one of the questions we have to write. If we have a company where they have a good balance sheet, their asset, you know, or good liabilities, not a lot, and then they have good equity. And then when we go to the income statement, we saw that they breaking even and they start making money, right? They start making money. Sometimes new companies, and invest the money. So what we want to see is the sector they are in, the products is doing well. So if the product is in demand, we might not stand against it because it has a negative net income, because as long as they make money and we invest the money, that's fine with us. So okay guys, so that was the balance sheet. I'll see you next time when we're talking about cash flow statement.